Hey, good morning, everyone. This is Chart Sniper again with a weekend review of markets, how they have been doing, and what is in line for the upcoming week, which is a short trading week. Monday is a holiday for markets because of Presidential Day, and we have only 4 days of trading. So let's see what's happening with the major indices right away, starting with SPY. So we are looking at SPY. Last week we noticed that here on a daily. Uh, so just to update you guys, I'm using a different template now that the market is threatening to move to some newer lower levels. I have added a monthly also. So we on the left you see monthly, and then on the middle you see weekly and daily on the right side of it. Okay, and last weekend recording has this trend line threatening to break this trend line, and yes, it tried to kind of move towards the trend line and broke it on Friday. So that's not a good bullish sign. With that being said, the volume has been very high, the sell-off volume. And again, remember that last Friday was an option expiration, which means they might be trying to kind of get the market to a certain place where they don't need to pay too much profits either for the call buyers or for the put buyers. Okay, so that's what it feels like. And if you make a closer look at it, we have this January expiration, January 21st, and we have this February expiration. So basically they made sure by February expiration, the price comes to the same levels as January expiration, so that all the crazy options, put buyers or call buyers, they do not make much money if the price stays around that. So we have to really take that last Friday action with some suspicion about the influence that the monthly expiration had in the price move, right? So whatever the upcoming direction would be next week, like next Tuesday, that's what determines the direction. So with that said, it's not good that SPY is breaking down last week's range, right? And making new lows. That's on daily on a higher volume. MACD is doing a negative crossover below the zero line. It's negative. The 50 weeks average, as you can see, the purple line, that is lost completely. We have some support at around 430, and we have some support at 420, cloud support if it hits there 425-ish. Okay. On a monthly, when we look at it, this week it lost that 5 and 8 weeks average. And if you make a closer attention to this, so this is a January candle, right? And we are trying to kind of stay in the lower half of the January candle in February month. um, and the real threat starts to happen when it starts moving below the January levels. Okay, so we may or might not move below that, but that's what it is starting to look at. And this 20 months average that we are looking at is around 403.92. I think we have not visited that 20 months average from March 2020, from May 2020. So I think that probably is in the cards. So if it comes to 403.92 in February itself, that would be a decent level to decent support level. But if we move to March, probably we will be seeing that 403, around 405 or 406. Okay, so somewhere around like 410 ish. Okay, so that might form a support for March month. Okay, so with that being said, it's trying to kind of lose that 50 weeks average again. Here it went below one for 1 week. It went below that and kind of bounced back completely. So similar kind of price action is possible. Okay, so but overall, there is no technically there is no positiveness out here. Okay, and RSI is not oversold on daily, neither it is on weekly or monthly. So I think it might continue moving lower if it wants to. Okay, so that's pretty much from SPY perspective. Monthly trend looks like a visit to 410 levels, which is under $25 from here, which is like 5% more. Okay, and that also helps in completing that formation. Okay, um, we also discussed in the previous sessions. Let me get that out. I wanted weekly 10 years. Okay. So we also discussed last time that whenever it tries to kind of form a bottom, there is a low, and after 5 weeks there will be a low again, but that time that will be a higher low formation, right? So we kind of discussed that a little bit multiple times. We have seen that happening in the bottom formation. So like here, if you see a low and then 5 weeks later another higher low, and a low under higher low kind of thing. So these kind of formats are very common, and that's what exactly we are doing. We are seeing here a low, and how high will be the, maybe the week starts bearish, it might or the week start flat, or if the war is there, it might start negative completely and come here, and there could be a opportunity for it to form a significant low and start bounce off from here into the April month, March and April month. So that is quite possible. Okay, I'm not framing here a doom story or something like that. Market already probably priced in inflation and rate hikes with this down move in January, and it could probably consolidate here, form a higher low, and move again forward into April month. But we have to wait and see. And this expiration, we can ignore the price action because there will be a lot of option influence there. So with that, let's move on with QQQ. So QQQ, it's kind of trying to showcase what exactly, I mean, SPY might follow the QQQ path, right? QQQ is staying ahead of SPY, and again, it's trying to, on a monthly level, if you can see, it's already trying to test that 20-month average, okay? So almost like, two years average price. So yeah, we have to really wait and see, what exactly it does at 334 level, whether it could hold or it would want to move lower from that 334 level. That's what dictates, the upcoming price action potentially in SPY also. And as you can see, it entered the cloud, and probably it came out of the squeeze, and we are looking at, 334 is what the previous Jan low was, and that aligns with that 20-month average. So we might see that action coming in, going and testing there, and see if it wants to visit these lower levels that I plotted here, 324 and 311-ish. Okay, and this looks like a big bear flag. For example, if you can see, this was a big down move. So this was a big down move, and then it's trying to kind of form that bear flag. And if it resolves lower here, so then we'll be looking at similar kind of down move potential here. Okay, but or it can do another dance here, bounce back up, and then move lower. Okay, so there are multiple options for it to uh, use how it wants to explore those lower price levels. But as long as the price is in the cloud, it just noise, and nothing more than that. Okay. Okay, on weekly perspective, the sell volume has been higher on 2 weeks, consecutive weeks, and we are seeing that MACD with increasing, and already there is a MACD crossover, negative crossover on monthly. Okay, so it's a strong trend. It has been for the last 2 years, and this is not that a big deal, I would say, when it wants to revisit some of those. A percentage of it. Okay, so it's still, if you can see from this entire up move, only 38 point, it did not even come back to 38.2 retracement. Okay, so that is very possible, and we should keep an option for it to come back to the 315 levels here, and then make a decision. 315 would be the 38.2 retracement of the entire up move, and also it is the 100 weeks average, and probably it aligns with something strong on daily too. Okay, so what we are looking at is, price is still overall in a bullish trend even with this much pullback, and there is still some more room for pullback all the way to 315 and still be bullish. Okay, so only one third of the entire price move has been reversed back. Okay, so with that potential in mind, and the daily MACD negative crossover happening, um, even if you see a bounce, don't take it for granted next week that that bounce is going to last forever and we'll be seeing all-time highs again, right? So I want you to be cautious in that perspective, that we can go and revisit these levels. So then nothing wrong to be cautious, and nothing wrong to be prepared for that, and have some capital on the sidelines so that we can deploy it when it comes to that long-term support level. Okay, but overall, I always say, monthly middle Bollinger Band 20 months average is a very strong representation of overall direction, and as long as it is staying above the 20-month average, we should be kind of mildly bullish, okay, from the long term perspective. But once it breaks down that, then until it gains back that 20 months average, we should not even try to play on bullish side. Okay, I mean, a lot of people might say that, hey, the market is forming bottom and it might bounce from here, but we never know, right? Okay. Um, yeah. So still in bullish area, a bullish zone from monthly perspective, but it's very weak weekly and daily on QQQ side. So let's get to IWM. What exactly it is doing? So IWM is representing is one step below the QQQ. So IWM is leading the down move, and then QQQ is following it, and SPY and probably Dow Jones is following it too. So what IWM did is it kind of closed. I mean, for the February month, it's below that 20 weeks, 20 months average. The volume so far is not been that high with respect to that sell volume, but overall it's in the cloud. It touched the cloud bottom on weekly, and try 100 weeks average, and trying to kind of form a base around this level. We have to really see what exactly is in line. So it also, if you can see, this is a perfect bear flag, and if technically it breaks down that with this flag, right? If it moves above this consolidation, moves down low, then it can retrace back almost the same amount of move to the downside. Okay, so maybe it touches that 200 weeks average at 174. Maybe I'm just saying maybe on a continued negative um, move. Okay, or it can go back all the way to this cloud and come back again later too on a weekly perspective. Okay, so IWM probably it is going to retest that 188 levels. That's where we should go and try to see how it reacts there and make a decision there. As of now, it's in not no touch zone. It's below monthly 20 months average. So yeah, we stay on sidelines with that. So the next one that the next major index that we'll be looking at is Dow Jones. So what we are looking at, this probably is one of the stronger indices there. It was, and now it is also kind of giving up, giving up to the entire market and directions, right? So overall, it lost its 50 weeks average too, and on a monthly level, it has that, a lot of space to fill up towards the 20-month average. So we would like to see, whether February month makes new lows with respect to January month, or it stays within as an inside month candle. We have to really see. Yeah, and it broke the downtrend line, very similar to SPY here and MACD crossover. It's a little bit, um, yeah, showing some signs of negative crossover here. Okay, the MACD crossover happening. So gap is increasing on weekly from moving average divergence perspective. So uh, at an outline, what is happening here is, everything is trying to kind of revisit some of the Jan lows, and whenever it goes to those levels, that's where we see, depending on the price action, whether it's bullish or bearish, we can make some decision there. But overall, that takes that onto a weekly cloud, and we should be open for a bounce here or a pullback here. Anything is possible. Okay, from intermittent perspective. So another request from on the YouTube. So they wanted to discuss the bonds, how they are doing overall. So let me get here. So when we look at this TLT is 20 years bond ETF, and when we look at it, this probably aligns with the overall trend that QQQ is following. Okay, so if the bond prices are falling, then as the interest rates will rise, the yield on bond keeps falling. So they are inversely proportional, and we are looking at, similar kind of move in 2008 that brought the price here, a bounce, and then finally to this level, right? And then a bounce to the middle range, and finally came back to that level again. And we are looking at a monthly chart, very long-term perspective. So here also a move down came happen with that half of it and came back to low of this one. So if you take this here, it tested one, and then here almost it tested twice. So if you take that range, probably we'll be looking at, it exploring these levels. So long-term perspective, one from 138, if it can go to 123 or 125, that probably would be a bottom, and that might align with our completion of this pattern, also ABC pattern, A, B, and then C pattern there. So whenever I say we might see further lows from TLT perspective, also we are looking at, that move flush down would be good from a long term support perspective. So if it comes to 125-ish, then that would be a good sign for the overall market potential for a bounce, like it has been for the last, how many years, from 2008 to last 10 years, right? So that's what we are looking at. From TLT perspective, it has been weak, and technically, it's not much different for than the entire market. And as we know that, interest rates are not at a highest level now, Fed will be starting a rising interest rate, and we have more potential for this TLT to kind of go down. So 125 was from the long-term trend perspective, okay, and yeah, we might not go to 115 levels, but we never know. Overall, it's drooping on a monthly time frame, and this also acts as a preview to what's coming, right? So as you could see, it moved below the monthly average in December, okay, and then the market followed with that one, right? So it has been staying lower for the last 3 months, so no signs of what's about to come. So on a weekly perspective, there was some bullish action at this middle of this downtrend channel, and we have to see, if the bullish action ends up being like this one and then further sell off or a continuation, but below 200 weeks average. And we have to see, whether there will be a bottom formation here in TLT, thereby technicals, QQQ, all this kind of stuff, or it will go further lower. So a lot of uncertainty and a lot of parameters again when we go and look at some of these leisurely and try to see what patterns they are forming. I think as you can see, if this is a left shoulder, right, head and right shoulder, bigger right shoulder, but again, this level has been holding from about last 2 years, and when it breaks down, that would be a flush. That would be a flush technically to visit those 125 levels. Okay, so yeah, it's a clear formation there. Not a perfect head and shoulders, but um, we have to wait and see how it reacts to these 133 levels and stuff. Okay, and a flush can happen in 2 weeks of time. Okay, probably during the March Fed um, announcements. So be aware of that. And yeah, so that's from TLT perspective. Overall, let's go and see how VIX is doing. VIX again moved above the 25 level, and from weekly perspective, it's staying above that 5 weeks average. And from monthly perspective, it has some room to go to that 35 level again, right? So VIX is staying higher. Technicals looks good on the VIX for moving higher. So market is still not out of woods in any way, and we can revisit that 35 levels and probably higher that one also if we are going to see that flush fully. Okay, um, SKEW 128, so it's kind of bouncing up and down, and there was at 133 level. So this is now not representing much concern out there. But again, we have to wait and see. It could just go from 130s to 150s just like that. So we have to wait and see. But high elevated wicks and potential for testing back January lows and even further lows as the interest rate decision is made. Some of these wars intensifies and stuff. Okay, so far a good consolidation month for February, forming a sideways action within the range of January, but the real action happens when it goes and tries to revisit those January lows and where exactly it will go from there. Okay, so that's pretty much our high level analysis for the put calls ratio wise that was above 1.02. So that's again um, signaling some alarms, right? From the bearishness perspective, a lot of puts were bought. So that might just trigger a counter trend upside bounce, but that bounce is not going to be a strong bounce to all-time highs. It might be a bounce to just neutralize this over bearishness and then further move down lower. Okay, excuse me. So call ratio says a lot of fear is there. So we have to wait and see for to get that short bounce probably on Monday and then complete sell off and trying to visit the lows on Tuesday or something like, or on Tuesday, because Monday is holiday, right? So short weeks, nothing, not much big moves happen typically. They try to close the weeks as flat. So any price action that happens, if the initial price action is to upside during the middle starting of the week, um, then it might come back and neutralize it. Okay, if the initial action is down, it might bounce and neutralize it towards the end of the week. Okay, so with that being said, let's quickly move on to some of the other stuff that we usually discuss. Okay, so Bitcoin, again, that long-term channel, and is trying to hold that no monthly averages for both January and February, and as long as it stays above that, simple, keep it simple, right? If it is above 20 months average, then we can consider it as a bullish, mild bullish market. Okay, so we have to wait and see. Ideally, it has the potential to go all the way to 53,000 again before it could collapse, but we have to wait and see um, for that control. It's for now channel bound. Okay, and Ethereum also should look very similar to that. Yeah, it doesn't have that 26 periods yet. To kind of probably chart those things. Yeah, so it's looking very similar to that, very range bound and in this channel, and there is a potential for it to go back to that middle of the channel and come back down. So for now, it's kind of trying to consolidate sideways. Okay, so let's move to our stocks analysis. Major stocks: Apple below all the averages, 5, 8, 50, and 20 averages. So 162 is going to be the next support, or the cloud 165. Bottom is the support. From weekly perspective, there is further down move possible around that 163 level, the weekly middle Bollinger, and on monthly level, it's trying to stay above the 5 months average. So which is good. So Apple 163 is primary support, and then we'll be looking at some secondary support of 162-ish, like that. Okay. So and then let's move on to the next one, which is Amazon. Amazon looks like it's in a tight squeeze, as you could see on a monthly. It's trying to break down that. That is a very, very. So as you can see, the Bollinger Bands came together and closing so tight. So a big move is about to come. We do not know which direction it is. Below the 20 weeks average, 20-month average, probably it is trying to go and explore the 2400, right, for the bearishness kind of move. So 2400 seems to be some decent support, with 200 weeks average at 2460-ish. Okay, so strong bearish directional move despite that bounce, right? So we have to we have to wait and see how it behaves. So market is trying to move and test towards the January low. So Amazon is not an exception, cannot be just an exception for that one, right? So it might also start moving towards those levels. Okay. But long-term wise, 2400 seems to be a good support level where you could start nibbling Amazon. Okay. Um, yeah. Next one is Google. A strong reversal this month, 50 weeks average lost, and high momentum downward move in Google too. So support is going to be around 2250-ish long-term support, okay? But the cloud support is going to be around 2500-ish, okay? So 2500 is the Jan levels, right? So everything probably goes back to visiting the Jan levels, and if further bearishness continues, then it might go further down also. So Facebook below 200 weeks average, below 50 months average. So the cloud support is going to be, around 181. It basically back to the it's basically back to Jan 2020 levels. Okay, so what it means is pre-COVID. I think, yeah, pre-COVID levels. Okay, with interest rates tightening, no free money available to keep the prices inflated. This is pretty common with all stocks. Okay, so they're trying to get them back to that 2020 January levels. All the free money, interest-free money, stimulus money kind of took it higher, but they're going to take it back to that reality growth curve of around Jan 2020-ish. So that's what seems to be the trend looks like. So from supports perspective, the monthly also is not showing some decent support until once the cloud, which is around 183, but the cloud had a dip here, so we'll probably be looking at 175, and then 100 weeks average might catch up with that 170 level. So 170 to 180 level is going to be a long-term support uh, for Facebook. Okay, but such a but that candle is kind of huge, from 320 all the way to 206. Yeah, so it's leading the down move in the FANG stocks, I would say. Next one is Tesla. As I mentioned, Tesla, even though it might look strong, it's no exception to the overall market direction, right? So it's flirting with 200 days average at around 830-ish, right? 835. Um, 50 weeks average is 801. Remember, Nasdaq or QQQ already lost that 50 weeks average. Even SPY lost that 50 weeks average. So it's not exception. So it will visit back that 800 levels and further explore these downward levels to try to find its support, right? So on monthly, looks like 716 is a decent support. 720-ish, right? Probably that would be around 750-ish for March month. So we'll be looking at 750 as a decent level to kind of start looking into buying that. Okay. Overall, there is 20 days average. I think it will be lost, and this time when it lost, probably it's going to be a precipitous drop. And remaining one is Netflix. Netflix also same thing. It moved back all the way to the Jan 2020 levels. So all the COVID crazy move upside on free cash flow is undone. So it's back to reality. Okay, so we have to wait and see. But Facebook and Netflix might move a little bit lower, but it's very close to that long-term supports of this stocks. Okay. So yeah, nothing looking strong. All of these are weekends. All of these are weak, and most of these stocks you can't believe, like this one already lost 200 weeks average, whereas the market is at 50 weeks average, right? So Netflix and Facebook are leading the down move in the FANG stocks, and then the market is following those things. Okay, and again, these probably are the stocks which might bounce back first also. Okay, so as soon as the bottoms and support levels are hit, when the market is ready to kind of start moving higher, bounce back from that major support levels, these will be the first stocks to kind of bounce also, because it was at 700 and now you're getting at 350-ish, right? So long-term players would like to kind of will be very interested in accumulating at these levels, okay? And if it starts bouncing, then it can quickly go to that 500 level or something like that, and then decide further. Okay, so that's pretty much the theme, has been the theme for the February month, and the month is not over yet, and it just exploring the January month, lower side of the January month, but we have to see whether that levels really hold or not. So I would recommend you to stay cautious, to be patient with some trades. If you're already in some stocks in deep red, if you have a long-term horizon, then you should be okay, because probably even if it gets worse than this, not much damage is going to happen for some of these stocks. But overall market as such is still has some more room to move downward. Any bounces that you would see will be a quick bounces, which will be faded very quickly. Okay, so as you can see, the percentage up and down moves are pretty common. For example, here we have almost 1.5 percentage higher move on 15th, and then we have a follow up more than 2% down move, right? So these kind of up moves and down moves are quite common. We don't need to even surprise, like there is again 1.5% up move followed by a 2% down move also. So I want you to be cautious about what kind of price action you would see. A decent up candle doesn't mean the trend is changing back upward forever, right? So and this kind of you could see that volatility there, one big up move for the three down moves, and something like that, right? So one big green candle followed by two red candles. So I want to be aware of that, and volatility is still there. It's elevated, so and even if there is a flush and down move, that's going to be very quick and very sharp, and as long as you're patient with it, probably you'll have some benefits of it. And if you are patient and it starts going higher from here, that's okay. We will have proof of some kind of good technicals when it crosses above 5 and 8 weeks average, and we can play that gap, that range, right? But overall, it's better to be patient in this market than try to bottom fish. Okay. So with that being said, I would like to conclude this meeting. Thank you very much for patiently going through these charts. Looking at the 3 monthly, three time frame chart might have been a little bit confusing, but I wanted to get that long-term perspective for you. So yeah, with that being said, thank you very much, and see you in the next weekend review meeting.